Hi, I'm Matilda. I will explain how to create and run your first backtest using ProfitSignals.com. First thing we need is the candle data. So we are going to create the candle dataset. I'm going to call it 20 tickers because I will add 20 tickers to it later. The dataset will have daily resolution and contain the last year of data. I click Create, and we have the dataset created. It is empty so far, so we need to tell it which tickers we want there. There are two ways to do that. 1. Add tickers one by one. Or 2. Upload the CSV file. The CSV file must have the symbol and name columns. Now we can sync the dataset. The sync time depends on the number of tickers in the dataset. For 20 tickers, it won't take long. Now let's start creating our first backtest. To do that, we first need a trade strategy. The trade strategy is a fancy name for the group of tests that follow some common principle. Let's say I want to develop a strategy that is based on a stock price drop. I will call it Buy the Dips 2 because I already have one. Here, I will create a strategy test and configure it. We can change the test name to something descriptive. For example, 5% daily close price drop. Now, we need to tell the test what candle data to use. So, we select the dataset. We can narrow down the test period here. This way, we can reuse a single dataset for many different tests. There is no need for a separate dataset for each test. Now we need to define our indicators. We do it here in Compute Graph. We will add the percentage change node here because we want to detect moments when the price drops. Let's save the workflow. Now, we need to add an open condition that will use the percentage change node we just created. Since we wanted to test 5% drop, we enter 5% here. We also can tune the single entry budget and the entry price formula. This will affect how many stocks will be purchased for each entry and at what price. Before I run the test, I want to explain the close rules. There are two default close rules. One is a stop loss. When we have a candle low price of a candle lower than 95% of the entry price, it means we reached a 5% stop loss and we close the order. Another one is a take profit. When we have a candle high price higher than 115% of the entry price, it means we reached a 15% take profit and we close the order. Now this test is ready. Let's run it to see the results. The test will execute for a while. It normally takes less than 30 seconds for small datasets. It may take 5 minutes or more for datasets close to 1 million candles. Now we can check the results. We see 66 orders in total, 44 lost and 13 won. Not a great result, but it shows how bad the idea was. And we can now choose whether we are going to improve it or leave it and try something else. There are also warnings telling us 9 orders did not close, since we have reached the end of the dataset. Let's check one order. Indeed, we entered the position when the close price dropped more than 5%. But apparently, then the price dropped again. That's why we have the stop-loss condition. We can examine the volume and other computed parameters on this page. This may give a hint what to tune to avoid this stop-loss order. Now, if we decide we want to improve the idea, we can copy the test, then tune the parameters of the compute graph, open conditions, and close conditions. That's it. We have tested a trading idea in less than 10 minutes. Thank you for watching.